Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you very much for joining me. Well, the Australian dollar retreat leads into the second consecutive day as the bears continue to defend the region of 71.90 to 72.0510. It is assessed that the market should continue its bearish course and look back towards the region of 71.30 to 70.80 where I've highlighted it here. Later today, we do have the release of the Q4 inflation data. The quarter CPI forecast is expected to have risen by 0.4%. And then the market will continue to look and monitor towards up-and-coming high-level US-China trade talks. Although a potential setback could be seen in the US-China trade talks after the US Justice Department brought charges against China's telecom giant Huawei shortly before a high-level meeting between the two countries in Washington. So, see how that all turns out. But nevertheless, from a technical point, I still feel the market is looking to the downside and potentially hold towards 70.80, with immediate support seen at 71.30. I don't have a strong view when it comes to the euro at the moment, purely for the fact is that although the resistance is capping around 114.55, is the market technically can push through there. The dollar index is still a bit of a concern as it trades around 95.50 this morning. With the recent down challenge on the US dollar, it could come in around 94.40 to 93.40. Later at 6 a.m. tomorrow morning, the market gets the announcement of the Fed's rate decision. It is widely expected to see the Fed hold rates steadily at 2.5%. Last year, the Fed raised interest rates 4 times, but since then, Fed powell has indicated a willingness to be patient with monetary tightening, saying it will be based more on economic performance as a whole rather than just inflation. Then, on Friday, we have the latest US monthly jobs report, the non-farm payrolls, which could trigger yet another round of choppiness in the US dollar. So from a technical point, if we can break above 114.55, and if that would mean the dollar index is heading towards 94.40, then this would give view towards 115.15 to 115.80.90. Dollar yen isn't going anywhere in a hurry and still remains capped from the 110.20.25 resistance. At present, though, the technicals are breaking down from the RSI and keeping a close watch on the MACD. Therefore, could see a move towards 109.15 or to 108.45.55 and reassess from there, with the cap, as I mentioned, towards 109.70 to 110.20.25. The pound has plummeted away from the 132 and now respects this up channel or trend line at 130.20.40. What is interesting is a turnaround from the EU officials after the fact that the EU officials on numerous occasions said that there would be no renegotiations. It would seem that the British lawmakers have accepted the amendment of 317 to 201 tabled by Graham Brady, the chair of the 1922 committee, in the voice of Tory bench backers, that amends to replace the Northern Ireland backstop with the alternative outlook that could see a follow-on for further new negotiations. But the divorce from the Brexit is getting closer, and it's at March the 29th. My view on the pound, though, is only turning bearish if we break 130.20. This would open the way down towards 128.40.60. Until we get a break there, until the technical implications come stronger to this bearish case, be on your guard in case we get a rebound and look back towards the region of 130 to 132. The gold is soldering on, and now from the break of 1,300 posts a fresh 8-month high of 1,311. From a technical perspective, I've put the weeklies on. I do expect to see the gold eventually reach 1,350 to 65, but I think the initial target for now is 24. So therefore, we could see a rise up towards 12 to 16, 18 and 24. But do be on your guard. We are getting overbought from the weekly and also from the daily. Therefore, could see a pullback to the region of 1,305 with a base seen at 1,297 to 1,301. Wrapping up with oil, well, the market just held in there at $52 a barrel and rebounds strong in an overnight rally of around close to 2%. It is assessed that the bulls are safe for now as the market remains above $52 a barrel and at this stage holds to an objective of $55 and reassess from there. Well, that wraps up for today. Thank you very much for joining me, and as always, look out for the intraday report, and I hope you enjoy the rest of the day that's ahead.